Hello and good morning. It is Sunday morning and we're having a look at market ahead, starting with one or two pairs that we're interested in trading for the next week and one or two shorts we're already holding. One of the biggest stories right now is that Fed is tightening liquidity and is continuing to do that. And price IG or IG and high yield is pricing already a lot of risk as well as a continuation of these liquidity tightenings. There's two or three indicators I would like to point out that can point us towards the direction of trading in the next week and where the best opportunities lie. One of the most interesting things for me right now is that the Federal Reserve is trying to push the real 10-year yield in the United States higher to hamper growth a little bit as growth is running hot. So we saw already in the month of May rally to a top of 0.34. It dropped back a little bit and it's currently climbing again. As 10-year yields, real 10-year yields continue to climb, you will find that gold declines as they have a near perfect inverse correlation. So for us speculators looking at these levels of 1800 is a time to expect it to come lower. So I'm expecting these lows to give away within the next quarter or so and start trading below 1700 as the year moves along. So that's one of the longer term plays we're interested in. It's not a new trend, it's something that's been flagged now for the last few weeks or so. Moving towards EURSD, EURSD has got a structural problem right now with the Ukraine war, with gas supplies, with growth from China slowing down, and Federal Reserve sucking out liquidity out of the market, and a lot of investors are moving to cash, raising the need for USDs. That is driving EURSD lower. So as we are moving lower with EURSD, big picture, I'm expecting EURSD to to bottom out somewhere around these levels here, so 1019 or 1012. And then from there on, we might rearrange where EURUSD could go and change our perspective on these things. But for the time being, the pressure for EURUSD is lower. In terms of calendar, next week we have a couple of interesting things. So we have the ECB minutes on Thursday, and on Monday we have a lot of Fed speakers coming out. All of these things, I said Monday, I think that is Tuesday. Yeah, on some Tuesday we have some Fed speakers coming out. I'm seeing all of these to pressure EURUSD on the downside, as will be most likely USD positive. On the other side, we have some Australian dollar, Australian data through. We have got RBA minutes. We also have wage increases. We also have unemployment data. All of these I'm expecting to be positive for Australian dollar. The nick here is that we have parliamentary election in Australia, and there could be a build of small risk premium. But all in all, I'm expecting these to pan out on the downside for Euro AUD and for GBP AUD. So for Euro AUD, if we have a look at the yield, we have a look at our yield spreads, they are pointing for lower levels to come. So we tend to use our yield spreads as a leading indicator, and that says that these lows here should not hold. Whether next week or the following week, there's lots of spark of volatility, but we certainly should be looking at about 400 or 500 pips lower for Euro AUD. To some extent, the yield spread for pounds for sterling and the Aussie is showing the same dynamic. We left the weekly gap last week. I'm expecting this to blow out in the coming days as we are rolling towards the RBA minutes. Another thing that is positive for the Australian dollar right now, specifically if you look against crosses, is the fact that market has started to reprice some of the RBA hawkishness. So in the beginning of the month, we saw 93% possibility of increase to 75% for the next meeting in the 7th of June. For whatever reason, market has started to reprice that lower. So the dynamics that are in play are still there. Inflation is high, unemployment is really good in Australia. We don't see RBA not hiking. For that very reason, I would expect the 70% move back to 93% eventually, and that should have a positive feedback on the Australian dollar, and hopefully then drag down those two currencies, which we are right now targeting as well. Moving forward, we are having a look at what the CFTC data is doing. CFTC data is showing there's a continued buildup in short position in the pound sterling, but long added in the euro. So not to get too confused why longs are adding, one of the main reasons is that Euro USD is extremely cheap. So it's at multi-decade lows. It hasn't been there for a very long time and tends to, when it comes around these levels, bounce. However, this time around, the dynamics are a little bit different. and we have to keep an eye on how that will evolve. But keep a close eye on this positioning, as I feel like there will be some movements coming very soon. That's all I wanted to cover for this week. Again, we are a bit more bullish on Australian dollar, specifically against pound and the euro. EURSD has still got room to go lower. And apart from that, for our yen pairs, all the things we will be looking at is, well, the most important thing I should say, is how inflation expectations evolve, or the break-even inflation rate. It's currently coming down. It's bounced a little bit, but going from here will be very important to see how it navigates, to understand where our yen pairs will be trading at. Conventional wisdom says inflation has not peaked. Charts say they have, so we have to take it with a pinch of salt and see where we're trading from here. I wish you all a very successful week. I will be touching base throughout the week with you all, and if there's any trades, I will communicate in a trading room as well. Thank you very much for joining, and bye.